Hi, everyone. Welcome to the DAOrayaki community AMA. I'm your host, Youfu. DAOrayaki is a decentralized media protocol focused on curation and publishing. By building essential decentralized media components, linking founders, creators, curators, and readers in the community to freely create, research, and curate, publish, and report on various topics. This is episode 11 in a series of research collaboration between DAOrayaki and the TubaDAO. So what is the MEV? I think recently the Silicon Valley Bank collapse event is attract a lot of attention. And there's a tweet said this one guy lost 2 million USDC because of just in a trading. And what is MEV and how does it generate profit for traders? And how this huge amount of asset of a whale can be, let's say, taken by this MEV bots? And what is the risk and the opportunities in such a crisis? And how can flash loans in DeFi achieve the zero capital returns? And with these questions, we are so glad today to have Wang again to talk about this, all of this. And so let's welcome the lead of TubaDAO Research, Wang. Welcome, Wang.
Hi, Yongfu, and good evening and good morning, everyone. My name is Wang Ye, and I am the lead of the research track from Tsinghua University Blockchain Association. I'm so honored to be here today to share with you guys a very large MEV arbitrage during the USDC DPEG panic last week, and introduce some basic information that you should know about MEV. I believe many of you have heard about the Silicon Valley Bank crisis last week. The SVB has stuck in the liquidity crisis and was closed with jaws. Last Friday, the SVB was closed and sent into bankruptcy. So its crash has triggered a series of chain crises that spread to the crypto market. As last Saturday, one of the issue of stablecoin USDC, Circle has announced that it has approximately $3.3 billion are deposit in the SVB. So the Circle's risk exposure to SVB has caused panic in the market, and investors began selling their USDC for other stablecoins like the Tether, also the USDT. So USDC has faced severe pressure, and its price has sustainably decouple and fall as low as to about $0.9. So at the same time, some SECs has also suspended their USDC exchange services. So during the panic and the chaos in the market, the token prices experienced severe fluctuations. But there are also opportunities for those MEV searchers to find some profitable opportunities. During the process, some traders are also unfortunately became the target by the MEV searchers, and they may suffer huge losses. And now I will present you a typical MEV arbitrage, during which the MEV bot has gained nearly $200 million in one single transaction. So let's see how it happened. First of all, an investor with an address starting with 8FF has tried to convert its stablecoin position by swapping their 2 million 3 CRV tokens for USDT. But 3 CRV is the liquidity pool token of the curve pool composed of USDT, USDC, and DAI. But this whale, instead of directly releasing its LP token, it choose to send a transaction via a Kyber swap aggregator, which routed this transaction to a liquidity pool on Uniswap with almost no liquidity. And there is only about $2 available in this liquidity pool. So, and this liquidity pool has been idle for about 250 days. So according to the analysis by the Twitter user, Baotide Pickle, in addition to the issue with Kyber swap root, this whale may not have set the slippage correctly. So this transaction has unfortunately become a target of the MEV bot. After this whale sent the transaction, the MEV bot has completed a backgrounding transaction and paying $45 in gas fees and about 24 ETH worth builder reward to swap the swap for about 2 million 3 CRV sent by the victim by only about 1 USDC. So this MEV bot has harvested about $2 million in profits, and the whale's 2 million 3 CRV tokens were only exchanged for about 0.05 USDT in the end. So let's see the graph that shows the token flow of this whale's transaction. First of all, it sent the 2 million 3 CRV to the aggregator, and the Kyber swap has routed this transaction into a Uniswap V2 liquidity pool, as shows in the step 1. And then in this liquidity pool, the 2 million 3 CRV has swapped for only about 0.05 USDC in return. And then in another Uniswap liquidity pool, these USDC are swapped for USDT, and these USDT are returned to the whale suggest. So how the MEV bot do this? For example, as you can see, this liquidity pool in the Uniswap V2 is also in the MEV bot transaction, as shown here. The MEV bot has sent 1.4 USDC to the Uniswap V2's liquidity pool, and in this pool, it swapped for about 2 million 3 CRV just sent by the whale. And those 2 million 3 CRV were returned to the 2 contract, as well as 2 contracts, namely the MEV bot suggests. And then the MEV bot has swapped those 3 CRV from Curve and returned with about 2 million and 85,000 USDC in return. So this transaction shows how the MEV bot robbed those 3 CRV from the whale, and this is in the panic emotion during the USDC crisis. So it shows the huge risk when the traders are doing swaps in the DeFi market. So in the DeFi ecosystem, MEV is the most annoying, but also an avoidable risk issue for traders when they are making swaps. Especially in the crisis, MEV became the most active and disruptive force when the market is unstable. As shown in this chart, during the Luna crash and the Celsius 3 Arrow Capital's collapse, as well as the FTX crash, the MEV searches activities are becoming unprecedentedly active. So what is MEV and how does it work to make profits, especially in the crisis, and how to analyze and arbitrage MEV transaction? Also, how to use DeFi's flash loan to make arbitrage to get everything for nothing. This article will show you the answers to these questions and provide an introductory guide for you for some beginners who are interested in MEV. And welcome to the world of MEV. First of all, I would like to give a brief overview of MEV. In the context of POW, namely the proof of work, MEV initially referred as minor extractable value. This is because in the POF context, miners control the transaction inclusion, exclusion, and ordering. But since the transaction to the POS as well, namely the proof of stake, through the merge of Ethereum, the PBS, namely the proposer and builder separation, have split the block construction role from the block proposal role. So during this time, the value extraction methods still exist, but is no longer be called as minor extractable value, but it has the name of it of MEV has changed to maximal extractable value, and it refers to the maximum value that can be extracted from block production in excess of the standard block reward and gas fees by including, excluding, and changing the order of transactions in the block. So although validators are the only ones capable of ensuring a profitable MEV opportunity, in reality, a significant amount of MEV is made by those so-called searchers, who are independent network participants, that they are running complex algorithm, and they deployed those smart contracts, so-called MEV bots, to identify the profitable MEV opportunities, and automatically find some profitable transactions and send them to the network. So the logic of MEV, especially for the arbitrage, is similar to that of the high frequency trading in the traditional finance market. Since DEXs often adopt automatic market maker scheme, also the AMM scheme, every transaction may create a slippage. For every asset swapped, the new exchange price in the DEX will be affected. So this scheme provides an opportunity for those MEV searchers who want to profit from the price differences in different DEXs. MEV searchers can rely on the specific order of transactions in the block to make profit. They can scan the blockchain data, and they can capture the on-chain transactions sent from those ordinary users, and they can seek potential MEV opportunities in price differences between different DEXs. When they find those opportunities, they can then pay high gas fees to gain an advantage. So in the next part, I will introduce you several types of MEV transactions and MEV strategies. The first two ones are two typical MEV strategies. The first type is called front running. It refers to executing transactions before known transactions in the so-called mempool. The MEV searcher scans the mempool for chances. For example, if the MEV bot finds a transaction with large trading volume, which will definitely influence the slippage on a DEX, it will copy the user transaction and pay a higher gas fee to ensure that its transaction has the highest priority in the order of the block and can be confirmed earlier. And on the contrast, the backrunning is a technique used by searchers who want their transaction to be processed immediately after an unconfirmed target transaction. Backrunners can send multiple transactions, sometimes from different accounts, with the same gas fee as target transaction to increase their chances of success. The $2 million arbitrage below, as we discussed, as I showed you before during the USDC panic, is a typical example of backrunning, as the MEV bot in that transaction, immediately order the whales transaction to swap 3 CRV to USDT. And in the next, I will show you the 3 types of MEV. The first one is arbitrage. Basically, arbitrage is to buy low and sell high between different DEX liquidity pools when taking advantages of the difference in the exchange rate to make a profit. For example, if 2 DEXs are selling a token at 2 different prices, someone can buy the token on the lower price DEX and sell it on the higher price DEX in a single and automatic transaction. Since the transaction is completed immediately, so the arbitrage is true and riskless. And in the next part, I will show you a typical arbitrage and to present you how it works. First, the searcher will scan the blockchain data and find the different exchange rate in 2 liquidity pool. For example, it may discover that the exchange rate for WETH and USDC in the liquidity pool LP1 on Uniswap V3 is 1,300. Namely, 1 WETH can get 1,300 USDC back, while the exchange rate is 1,305 in the liquidity pool LP2. So the searcher can then take the advantage of the difference in the exchange rate between the 2 liquidity pool, and it can swap 130 USDC into LP1, and it can get 100 WETH back. And in the next step, it will swap the 100 WETH get from the LP1 into the liquidity pool 2, and then it can get 130,500 USDC back. So the total revenue the searcher can obtain is 400 USDC, and the net profit equals to the 500 USDC minus the gas fee, namely the 0.02 ETH in gas fee. So this is a very simple arbitrage in the market. But in addition, searchers can scan for the price differences between token pairs across 3 or more liquidity pools, such as WETH to USDC, WETH to DAI, or DAI to USDC. And it can conduct multiple swaps by continuously exchanging different token pairs 3 or more times. For example, in this transaction, the MEV bot can swap for 3 times in 3 liquidity pools. If the exchange rate for WETH to USDC in the LP1 is 1,300, the exchange rate for WETH and DAI in the liquidity pool 2 is 305. And in the liquidity pool 3, 1 DAI can swap for 1.1 USDC back. And a researcher can take advantage of the exchange rate between the 3 pools by the following steps. First, it can swap 100 WETH for its initial capital of 130 USDC. And then after getting the 100 WETH back from the liquidity pool 1, it can swap this 100 WETH for 130,500 WETH DAI back. Sorry for the mistake in the graph. And then after getting the 130,500 DAI from the liquidity pool 2, it can use this DAI for swapping back 143,550 USDC back from the liquidity pool 3. So in this transaction or in this arbitrage, the searcher can get a total income of net income of about 13,550 USDC after paying for the gas fee to the builders. Its net income equals to the revenue minus the ETH paid to the builder. And similarly, in the real world, MEV searchers can also, taking the price difference between multiple token pairs in multiple liquidity pools to realize the buy low and sell high arbitrage. Currently, through smart contracts, MEV bots can even swap hundreds of token pairs from hundreds of liquidity pools instantly. For example, in the following transaction, this arbitrage bot has swapped nearly 81 tokens in 172 liquidity pools. So this is very common in the market. And for the whole DeFi market, arbitrage trading actually plays a role in the price discovery. Arbitrage that don't mess with trading orders bridge, and they can breach the pricing information in the DeFi market, as users can find maybe the price for a token pair in A DEX is lower than the B, and after the arbitrage, the price will tend to be the same. So it can make the market more efficient. However, in the next part, I will introduce a more harmful type of MEV, the sandwich attack. Sandwich attacks are also very frequent in the DeFi market, but it is very dangerous for for some traders, because it may hurt your revenue when you are making the swap in the DEX. A sandwich attack involves sandwiching the victim's transactions between two transactions initiated by the searchers or the attackers, whose reordering the transactions inflict loss on the victimized users and will possibly benefit the attacker. So DeFi users need to send their expected transactions to the mempool, as we said before, to wait for the confirmation by the builders. And these transactions are not immediately put on the block. For example, if you send your transactions, you should wait for the confirmation by the builders and validator. So this needs time. So the time during this process has give the opportunity for those sandwich MEV bots to conduct attacks by taking advantage of changing the transaction orders with higher gas fees paying to those builders or validators. And MEV bots typically look for specific transactions in the mempool and will attempt to front run or back run those victims. And I will show you a typical sandwich attack and present you how it works. First, the researcher noticed that a user is sending a transaction to swap 130,500 USDC for WTH with an exchange rate of 1,300 in the liquidity pool, this liquidity pool and in this DEX. And in the time one, the exchange rate of WETH and USDC is 1,300. But as mentioned earlier, each swap can cause slippage in the DEX. So the MEV bot found this opportunity, and then it paid a final gas fee to the builders and put its transaction before the user transaction. So let's see the first step. The MEV bot first swapped 130,000 USDC into the DEX and at the rate of 1 WTH to 1,300 USDC. So at this exchange rate, it can get 100 WTH back. So after the first transaction, the slippage in the DEX caused a rise in the exchange rate of WTH and USDC. So in the time 2, the 1 WTH can swapped for 1,305 USDC. So the users have to pay more USDC to buy the WTH. So in the next part, in the next step, the users transaction was executed, and the users 130,500 USDC was only exchanged for about 100 WTH, and the user can only get 100 WTH back. And then in the third transaction, the MEV bot swapped 100 WTH into the DEX and get 130,500 USDC back from the DEX. So as you can see from the whole process, the user can, the searcher can earn a total income of 500 USDC. As you can see, its initial capital is 130,000 USDC, and it gets back 130,500 USDC back. So the MEV bot can make a profit of 500 USDC minus the 0.005 ETH as the gas fee. But the sandwich attack does not improve the market efficiency. On the contrary, it causes loss to the user who sent the initial transaction and brings higher transaction risk to the market participants. At time 1, the exchange rate was 1,300. So the victim should have received about 100.384 WTH. This is definitely higher than the 100 WTH that the user received in the end. So the loss to the victim equals to the revenue to the MEV bot. So you can see the whole process of the sandwich attack is actually a kind of robbery against the victim in the market. So this is the main risk of MEV that all of the traders or all of the participants in the DeFi market should be take care of. And the last type of MEV is liquidation. While generally the lending protocols such as Aave and Compound, they require users to deposit a certain amount of assets as collateral and then lend this deposit collateral to other users. As the value of those collateralized assets fluctuates, due to the price change in the market, users' borrowing capacity also fluctuates. When the value of a borrower's collateral is not enough to cover its debt value, the lending protocol will liquidate the borrower. And anyone in the market can complete this liquidation process. So in order to incentivize the liquidation, the protocol charges a liquidation fee to those borrowers and pays a portion of those liquidation fee to the liquidator. So this also provides an opportunity to make profits for the searchers, because those searchers can, scan the blockchain data very quickly, and they can monitor all borrowers' positions to determine which borrowers can be liquidated, and they are trying to become the first one to submit a liquidation transaction and collect those liquidation fee by the lending protocols. And then I will show you a very special one of arbitrage. That is, use the flash loans to conduct arbitrage, and you can get everything from nothing. I will briefly introduce the notion of flash loan. It is because on the blockchain, a block is a package of multiple transactions, while multiple operations can be executed in one single transaction too. So as long as the final state of the transaction is correct, those operations can be completed. Given this feature, some lending protocols like the Aave has created the feature of flash loans. Flash loans are instant loans that allow users to borrow assets from the lending protocol without any collateral. But the borrower must pay back those loans before the transaction ends. Otherwise, the smart contracts will reverse the transaction, and all of the steps and operations in the transaction will never be executed and recorded on chain. Since the transaction usually ends in a few seconds, this type of uncollateralized lending across DeFi protocols is called flash loan. Flash loans can provide low-cost, instant liquidity for DeFi users and participants. And currently, several protocols like Aave, Balancer, Uniswap, DYDX, etc., they are all provide flash loan services, which creates opportunities for MEV searchers with insufficient liquidity to get everything from nothing. And in the following part, we'll describe how to use flash loans to make risk-free arbitrage. I will show you a real arbitrage using flash loan. And you can use several data products to analyze MEV transactions. For example, the EigenPhi, Zero MEV, and Flashbot's MEV Explore. And in this article, we will use EigenPhi's EigenTX. It is a visualization tool to for you to dissect the whole operation in one transaction. And in this transaction, this is an arbitrage using the flash loan where the searcher profited nearly 11,000, $12,000 at a cost of $5.6. And the following graph shows you the token flow of this transaction involved in the Uniswap. There are 5 nodes in the graph, as you can see. The 2 liquidity pool. This is the Uniswap V2 liquidity pool. This is a liquidity pool on the Uniswap V2. And this is another liquidity pool on Uniswap V3. And this Uniswap V3 pool is the flash loan provider. And this two address is also the MEV bot, the smart contract address deployed by the searcher. And the last one is the leaf node. This is the searcher's wallet address. So let's see the process of this transaction. First of all, the searcher found a price difference in the UO and WETH token pair between the 2 liquidity pools. The first one is the LP1 on Uniswap V2 and the LP2 on the Uniswap V3. So this provides an opportunity for arbitrage. First, the searcher swapped about 1 WETH for about 550,000 wool from the LP1. just the step 1 and step 2. And then the MEV bot swap the 850,000 wool from the into the liquidity pool 2 in Uniswap v3 and get back 11 WTH. As you can see, it sent 1 WTH to the LP1, and then after 2 swaps in the 2 liquidity pools, it get 11 WTH back. But actually, this MEV bot do not use its own assets. Instead, it borrowed this 1 WTH from the flash loan provider, the Uniswap v3 pool, and it used the borrowed 1 WTH and swapped this WTH from the 2 liquidity pools and then get 11 WTH. After getting this 11 WTH, the MEV bot paid back the flash loan, as well as you can see from the chart, the 1 WTH, and it also paid a very little flash loan fee to the flash loan provider. Well, after finish the arbitrage, the MEV bot then send the net income, namely the 10 WTH, to the searcher's wallet, also the leaf nodes in this graph. So it is worth noting that although the above diagram breaks the entire transaction down into several steps, in the smart contracts, all of those steps are completed simultaneously. So the searcher can even complete the arbitrage without paying any initial capital. So it is really a zero cost arbitrage. So the use of flash loans is also convenient for sandwich attacks, and the logic of using flash loan is similar to the arbitrage as we show you before. So the searcher can use a flash loan to borrow a large amount of funds instantly and create a larger slippage during the front running phase. And after the victim's transaction is executed, the searcher only needs to repay the flash loan in the following transaction. So as all 3 transactions, namely the searcher's front-running transaction, the victim's transaction, and the searcher's back-running transaction, are all verified and recorded on the blockchain at the same time. So the flash loan borrowing and repayment process can also be completed successfully. And this is all for the MEV types. So MEV is a unique product of the DeFi ecosystem, where the practices such as the arbitrage and liquidation can promote market efficiency, but the sandwich attacks can threaten every DeFi trader. According to the data from MEV Explorer, the accumulated profits of MEV on Ethereum have reached about $687 million. After the merge of Ethereum, the activity of MEV has been a little bit suppressed, but it also remains a significant market disruption force that cannot be ignored by everyone. So in the end, this article only aims to provide a quick introduction to the concept of MEV and underlying logic of its transactions, and also some basic concepts around MEV. However, in the real DeFi world, there are various types of combination, arbitrage, and new forms of sandwich attacks. So whether you want to avoid on-chain risks or become a qualified MEV searcher, you can use this article as a guide to start your advanced journey in the world of MEV. And that's much for today's sharing. Thank you for all your guys' attention.
Thank you, Wang Ye. It's quite challenging to read, to read all of these numbers, right?
Yeah.
Like
yeah, typically for Chinese.
Yeah, it is quite different from Chinese. The number is thousands or millions, so it's really different. And yeah, thank you, Wang Ye, for bringing us to this MEV world, and from this Silicon Valley Bank news, this event, to how this MEV can work and how can use it, and everyone can use this article, this sharing, as an intro to this world if you're interested. But here's yeah, as usual, there's a notice that for all the sharing one you did today and we did today, it's only for sharing research. It's kind of the purpose is sharing this knowledge, sharing this experience. It's not included in any in investing advertised, and there is also some risks in this market, in this real practice. So just sharing this, and it depends on you. Just be cautious of these risks. Okay, let's go back. There's currently DAOrayaki covers lots of covers and funds lots of topics like DAOs, governance, protocols, token economies, and game theory, Web3, layer 1, layer 2, Ethereum ecosystem, and public goods, DeFi, GameFi, SocialFi, and even quantum computing, space exploration, and many more other cutting-edge topics. If you're interested in all of these topics, and if you want to share your article, you want to share your ideas, you want to be heard, please, so welcome to join us from this QR code in the screen, and or from the links below. And the video of this episode will be uploaded on DAOrayaki accounts on Bilibili, YouTube, and other platforms. And the corresponding research content will be soon published also. And welcome to subscribe us, and just stay tuned. We have more this amazing, awesome content sharing, like today what Wang Ye did to come up. And once again, thanks to Wang Ye for this wonderful sharing, and thanks to Tubadao for supporting, and also so many thanks to all of our community members, and everyone here is watching. So thanks again. And this is all we have for today's AMA. And thank you. See you next time. Thank you, Wang Ye.
And thank you, Yongfu, and thank you all of the audience today.